back in 05, 06, we were paying 8% interest.
Yeah,
you know, when
right.
you started, I mean,
right.
like, so when I hear people crying about, you know, like complaining about 8% interest now, I'm like, man, you just make the numbers work. Do what you say you're going to do,
That's right.
execute, communicate, follow up.
Well, that's the way you did your business.
I started in the basement, you know, but if you go walk alongside of me, I can get you to the fifth floor pretty quickly because I've already made the mistakes between the basement and the fifth floor. You know what I mean? Like,
if you're willing to listen. Yeah.
If you're willing to listen. But we use Traction, like all the businesses I'm invested in use Traction. Like, if you don't write down goals and have a 5-year, like, where are you going?
You got a 10-year, a 5-year, a 3-year, and a 1 year.
Because one of our core values we came up with years ago was long-term partnerships versus short-term transactions. I don't want to partner with any transactional people.
All right, everybody, welcome back to another episode of the Evernest Real Estate Investor Podcast. I am one of your hosts, and I'm joined today by my co-host, Adam Hobson. Adam, welcome to the show, man.
Yep. Thanks. Good to be here again.
This is our second podcast today, so we like to stack them up.
That's right.
Two in a day. It's more convenient. Adam, it takes you about an hour to get here to the office.
That's right. We might as well do it while I'm here. You know,
Might as well do it. Might as well knock them out. But the great news is we've got an in-studio guest with us. This is going to be a great conversation all about hard money lending, and really probably even more than that. Probably going to talk about real estate investing because there's a lot going on out there. But we have Dan Butler with us. Dan, welcome to the show.
Yeah, thanks for having me. Excited to be here.
Yeah, well, good. Well, Dan, we've known each other for quite some time through just through the property management business.
Through all those conferences we all used to go to all the time.
All the conferences.
Running the circuit.
I was just telling we just recorded another podcast, and we were just talking about how great that community is of property managers. Like, everybody was there to help each other, and it was we made some incredible relationships, and you're one of those, and so we're glad to have you here.
Absolutely.
And so why don't we kick off? Let's just talk a little bit about just your background experience. We were just shooting the bull before we hit record and talking about your time in the industry. You've been a real estate investor for 20 years or so. So about the same time Matthew and I got in 2003, 2004.
Yeah, it was 2001.
Okay, so you're 2001. So let's talk about it and just talk about your market, where you were, and just how you got into the business.
That's a great question. Yeah, I started, so mine goes back to high school, college. I had a mentor that I was helped cut grass and board up houses and stuff, grunt work for real estate. And he taught me about wealth creation, and it just always stuck in the back of my mind. So I was trudging through engineering at Clemson and just knew, I was like, I want to do real estate. And so I was traveling back and forth to Memphis, Tennessee. That's my market, my main market. I've started doing work here down in Birmingham now, but Memphis is the main, and didn't know I'd moved to one of the best real estate markets for rentals in the nation. And so I was there about 2-3 years, read Robert Allen's Nothing Down in the 90s. Now I think it's Nothing Down in the 2000s.
Yep.
I'm sure there's another one, probably the 2020s or something. But it just hit me, like, he was basically teaching the BRRRR strategy before Bigger Pockets acronymed it and made it a popular phrase. And so I put a line of credit on my house, started buying rentals back in 2001, and I did double duty.
Is this while you had a W-2 job?
Yeah. I was in manufacturing. I was in operations. So I was managing plants, and just got a line of credit on my house, a little townhouse in Memphis, and started buying rentals just with local banks. And so that's one of my keys to success. That's why I was telling you guys after here, I'm going to meet with the local bank in Birmingham. I'm going to lose the bank where I'm at, and so I just use those guys and they help me to just use the BRRRR strategy and build a portfolio. And I did double duty for about 13 years. And then that's about the time we probably met. And then I jumped ship and we started Crestcore back in 2010 and built a property management company and other brokerage, management company, maintenance company, and then lending and virtual assistants and stuff like that. So
if you started in 2001 and you worked for 13 years, you were doing double duty there.
Yep.
I know those years, especially. So talk about, there were great years early on, and then 2008.
Yep.
I'm imagining, talk about how did you deal with 2008, the great financial crisis, and what were the banks doing then when you were considering this burst strategy? I'm guessing because you still had a job, they were like, "Hey, you're still bankable."
Bankable, I'm bankable. Yeah, the W-2s always help. I always tell people hold the W-2 as long as you can. Just just where you're comfortable with for your family. But back in 05, 06, we were paying 8% interest.
Yeah,
when you started, I mean, so when I hear people crying about like complaining about 8% interest now, I'm like, man, you just make the numbers work. You just got to find better deals, put out more offers. Yep. And I had tons of loans on 8%. But one of the key things that we were talking about earlier, like I bought it right and then leveraged right. I never took money out from the house I bought, and I always wanted on the note. I had notes 15, 12, 10. I even had 5-year notes. That's going to be your C- properties, but and I wouldn't say those are the best deals in the long run. Right. But I had 5-year notes on the rental properties, and so and I had local bank, relationships. And then when 08 happened, I had the W-2 still, but we were one of the few that were still paying our notes, and so the banks just started calling us left and right, and it was just a phenomenon that I never expected. I just was blessed that we did the right things, kept our word, always made our payments. Like I didn't even know there's a grace period for paying notes. Did y'all know that? Like you do on the first, you don't come in on a bad list till 10 days later.
Okay.
I just paid on the first because that's when my note said it was due.
Yeah, right.
And the bankers back then told me that no, everybody plays that game all the way to the 10th day.
Oh wow.
I say everybody. That's an absolute, but a large percentage of people. So when the market crashed, they were asking us to help them take the REOs off their hand. And they would just give us favorable rates, pay for the rehab. So I was getting 100% financing on hundreds of houses back in 08.
You're literally the only person I've heard to this day that I've talked to, because everybody I've talked to about 2008, I talked to Spencer about it, other mutual friends we have, they were like, we would be at the closing table, and I mean, it's like the day before we were there, they just said, "Hey, we're not funding anything else," So like, it's, I can't believe. I mean, we had a big line of credit at the bank, and they were just like, "We're shutting it all down." So to hear somebody say that they were actually lending money and like sending you deals, that's amazing.
Well, had this problem. They had all these houses. They needed to sell them.
Yeah. I mean, I literally told the story to a banker yesterday. I was like, there was one. I'll tell you if you don't mind. Like, there was one that I wanted to pay $55,000. There was 8 houses. They wanted 85 because they didn't want to write off more than like $30,000 a house or something like that. I said, well, the rents now are this. I said, here's my spreadsheet with the same things you and I were talking about before the show: vacancy, maintenance, management. I said, here's my spreadsheet. Tell me how you think I should be paying 85. Well, I met him that next Monday after the weekend. He passed the spreadsheet back to me. He goes, all right, I made it work. And guess what? He put it at like 2% interest.
Wow.
At $85,000.
Yeah.
Wow.
You some of us would say, well, that's a dumb deal, but no. Like in 3 years, I was clipping down so much principal.
Oh, yeah,
I was back past the 55 like that, and quickly accelerating. So anyway, I have dozens of stories like that just, again, right place, right time, but always just doing the right thing, communicating, paying your notes, making that the priority, not living off the cash flow and that kind of stuff. So that kind of was what set us up for that.
Yeah, so that's a great segue into, and you mentioned Crestcore, but you and your partner had several hundred houses that you had bought over the course of many years, and then you started a property management company called Crestcore, where you were not only obviously you had to manage your own property, or did you have a third party during that time? Or you were managing them all yourself. Man,
I've signed leases on the back of trucks, taking applications in a grocery store. I mean, like whatever it took, collecting cash for. I mean, my wife, we joke about it to this day. I would carry my daughter in a little carrier, picking up $50 at a time, $100 at a time. Like, what was I doing?
Yeah,
and that's a key principle that I learned.
You were hustling.
I was hustling, but like, you also learn like you're allowing behavior. Like you just had to learn, like they do the behavior you allow. So I was allowing. So once we made, I remember it was May of 2012, we said no more cash or no more pickup of rent. And we thought that thing was going to just crumble. You know what I mean?
You're expecting the worst.
The worst, like we're going to lose all our tenants. I lost one.
Yeah.
And literally that same tenant, the one that replaced that tenant, I remember this. I've never been back to that duplex since 2012. I still own it, and she's still in there. Pays every month online. So it just was like, what an idiot. For 3 years, I was going every week. She'd be like, "Oh, I'm at Kroger right now. I'll be there in an hour." And I'd just be sitting there like in a driveway waiting for $100. I'm like, what was that?
What am I doing? What am I doing?
Well, that's a waste of time. We only have so much time. And like,
Yeah.
that was not where my time should have been placed at that,
Well, it was a very similar thing that we finally got frustrated with. We had a showing schedule where we would show our houses to prospective residents, and so we were just like, "Hey, we'll meet you out there at this time, or we'll meet you out there," and they wouldn't show. And so you're like, "Oh, this is frustrating because I don't have it." And so I remember Matthew saying, like, that's when I said no more. And then eventually we went to self showing, and we had similar fear. We're like, here
Things
we
get
are in parts of
stolen.
Birmingham. Yeah,
Yeah.
what's going to get vandalized, stolen?
Back
And
the
guess-
truck up to the house.
yeah, and then guess what? Nothing happened. Nothing happened. And we're like, oh my goodness, we can like people like this. They can schedule their own thing
and go right when they're there.
Yeah,
live
they
in
can
the
go.
house.
So we've
Yeah.
had rent lease on all of on all of our properties, and it
It's
was
just a limited belief.
Yeah, that's right. It was a limited belief, but now this is what we do for every property in 20,000 properties around the country.
Yeah,
So
that's right. And then that's amazing.
okay, so now you had Crestcore, and so tell me you built this company up, because I think at one point you were managing around, and you can correct me, around 1,200 properties in Memphis, but maybe you were more than that, maybe you're less than that. So what did you do with Crestcore, and is Crestcore still around, or what's going on?
Yeah. So we probably got up to 2,000 plus Crestcore. We were in Memphis, Dyersburg, and Jackson, and then just through sequence of events, decided to split our houses, and then sold Crestcore Memphis. And then kept Dyersburg and Jackson, and then rebranded. And we just recently merged with Renshaw Property Management in Memphis. So we're back at 3,500 units in those three markets.
Okay. So you're a competitor of Evernest.
Yeah.
You're a competitor.
I know.
can't
We're sitting
believe
here talking.
We have you on the podcast. What are we doing?
But that's, it's funny. I mean, I was thinking about that when I was on the way over here. It's like, and we were talking about lending and helping each other. It's like, man, we're competitors, but like, it doesn't matter.
Doesn't matter.
The world is an ocean.
There's enough deals out there to go around.
I mean, Matthew's helped me with banks in Birmingham. If y'all need help with Memphis property management, I'm here to help. What do y'all need? I mean, like that's just.
Isn't that great? That's a great way to do business.
The world should be.
Yeah,
that's right. That's just a mantra that I've taken over the last several years, and I try to help people get over that hump. Or like, because when I first started real estate, I thought I was the smartest. Like I got all these secrets. You know what I mean? I wouldn't talk to anybody about any.
Yeah.
I'm not going to tell them how I. And then you realize like 99% of, like even doing this podcast, we're telling all these people how to do certain things.
Yeah.
1% of them will do it.
That's
Yeah, that's right.
Yep.
It's all about execution. It's all about going out and doing it.
That's right. And then most people won't do it. And so, but I love educating and I love helping. So I think you bring up a great point. Competitors to me is just like, I partner with competitors in other businesses. So it's a mantra or an avenue for different ways to grow.
And you're ultimately going to get more units or more deals or whatever it is whenever you collaborate, because there's going to be something that Spencer can't handle or that doesn't fit their criteria. And say, let's call him and see, you want to take this? Yeah, sure. And vice versa.
Yeah, I had something in Chattanooga come up. I texted Matthew, hey, we got an agent. I need some help selling this piece of land.
Yep.
Sends me an agent. You know what I mean? Like just collaboration.
Yeah, that's right.
So.
Well, good. So let's get into what we came here to talk about, which is hard money lending.
Right.
So you eventually, I think you just talk about how you got into hard money lending.
Great question. So my very first property was a 19 unit in Fraser, Memphis, and say it was worth $350,000. Paid it off in probably 10 years ago, and it made, call it $4,000 a month net after all expenses. So that's what, 48,000. So I just was sitting there going, all right, what else can I do? And I was like, I really want to get into hard money. I was kind of parallel thoughts. And I was like, oh wait, I can put a line of credit on my now paid off property, get a $300,000 line of credit and make, $35,000. So almost doubling the return on that asset. Does that make sense?
Yeah.
And so I went and got a line of credit, started lending on it, and we built a lending business out of that. So started with, and then as other free and clear assets would come, I'd put a line of credit on it and just kept doing that and building that up to the point, and this is a critical piece, like we had accounting so that our books were really tight with the profit, P&L and balance sheet. And so like for your listeners, like if you don't have that, that's something I would really encourage. Like get an accounting to like where you're really buttoned up on your numbers. But we were able to take that to the banks and say, look, I got a legitimate business here and the margins are really good. And so then they started creating lines of credit for us to do hard money loans to others. So basically we're just arbitraging the interest. You know, if the bank's charging me 8%, I'm charging you 12, and I'm charging some points, and I'm just keeping that spread difference. And the banks that get it really like it because really I'm the one guaranteeing it, and there's an asset, and there's another personal guarantee. So there's 2 personal guarantees plus the asset. So it's a pretty good, safe vehicle for the bank itself. And for me for doing the loan. So
you're being transparent with the banks. You're telling them exactly when you go in there, like you're not just saying, hey, I want a line of credit just because this is the asset. I may buy more I may do whatever with it. You're telling them up front kind of what your plan is.
So I actually do what they call a collateral assignment. So you assign the note to the bank.
Okay.
And they give you anywhere from 75 to 100% of the note value. And so that's how you leverage and grow that business.
Yeah.
But anyway, it started with just how do I extract? And then this is another philosophical thing of like, I put everything on 15-year note or less. We talked about it earlier. But when for me, putting on 30-year notes, that's tough because that's a long time. So if you can pay that thing off, that's when the real magic happens. You got so many more options when that thing pays off. And so that would be an encouragement for your listeners of like, how do you get there? Just pay it off as quickly as possible.
Yeah, that's the thing I think about. Like like I just think our world, speaking of kind of philosophical discussion, it's all about instant gratification. Like how can I get the most right now?
Yep.
What can I do right now? And I do know like cash is oxygen, and so it makes sense to wholesale houses, especially when you're starting out. A lot of times, that's the way we started. But when you are buying real estate for long term, if you can make the deal work, like that's the thing, you have to buy the deal right.
Correct.
In order to make that work.
That's right. And leverage, and then leverage it right.
Yeah, that's right.
Yeah.
Then leverage it right? Because we see so many people, we know so many people, so many investors, we talk to so many investors who are over leveraged, and it doesn't help them. Then what happens is when their house has an issue with it, it's like a major problem to them.
Yep. Yeah. And for me, I can tell you back 15 plus years ago, that apartment, I mean, I'll be like, and a quick story, my wife would be like, hey, why was there $5,000 out of our personal check to City of Memphis taxes, property taxes? I said, well, because the property taxes were due. She's like, why is it coming out of our main checking account? And I was like, because I ain't got it in the rental account. And she's like, well, I don't understand. Shouldn't they be making money? Like, but my point is like, if you're growing, you're going to be in the negative. Like that's why you should keep all your cash from your W-2 and all that stuff to pour into it to keep your payments as low as possible. But where I was going with that is like, I'd go to the P.O. box. I had a P.O. box back then. And that's what kept me going. I looked at that statement of that bank for that apartment specifically, but you multiply this by 100 or 200 houses, it was paying down $3,000 a month in principal. That's killing a 401k.
Yeah.
You know what I mean?
Crushing.
Like crushing a 401k. And so then it pays off, it's even better. You know what I'm saying? Like, so then 3,000 turned into 10,000, which turned into 20,000 per month. That was just clipping off these notes. That's what motivated me. So, and that's when I was like, it's a marathon, not a sprint. That's to your point. That's why I would look at it. So,
well, let's talk about how you underwrite hard money deals, because I'm sure you have a lot of investors, maybe even people that you don't know, come up to you and like you're not very familiar with their work. You don't know what kind of level of experience they have. How do you determine? Are you looking at both the investor and the deal, or are you just kind of basing it on the merit of the deal when you decide to loan money to somebody?
When I first started hard money, I would have said I'm an asset-based lender, and I still would say that, but you remember the 5 C's of credit, and I always miss all of them, but like the biggest one is character. And so I'm asking around, and the fruit doesn't fall from the tree. Like I like to have referrals from good borrowers. That's kind of probably the biggest source for me. But
that's your biggest source for new business.
New business.
It's like, hey, introduce me to some of your friends that you know that are
exactly.
money. That's right.
When I went on my own 3 years ago, that's all I did. I just called, hey, I'm lending now. Who do you know that you would trust to send to me? But the best profile for me is like if I have friends, like you do some of this kind of flipping, like, but if you sold to somebody in California who's got a day job as an attorney, that's my best client, because you're doing the work, but he's making the money to cover himself. And so versus somebody that's just doing flipping full time or whatever, those are the most risky that I found, especially when the going gets tough.
Yeah.
But I try to, to your question, 75% ARV is kind of what I'm looking for. I'll do 100% of the loan, and it's kind of a give and take. Like I'll do 12, but my interest is 12% and 5 points, but I'm doing 100%. So I'm in Birmingham specifically now that I've started here, I'm getting desktop appraisals on the front end. I'll make sure, one of the biggest things I learned over the last 3 years is like, do they have cash in the bank? Like, I'm a little bit hypocritical if you tell people you got to put cash in the deal or whatever, when I did my hundreds and hundreds with zero out of my pocket.
Right.
Like
the bank was giving you everything.
The bank was giving me everything. So I was like, it's kind of hypocritical to ask, I'd rather them have $50,000 in cash in the bank that is accessible and give them 100% financing, knowing if something goes rough, they can handle it, but they also have the money to pay my points at closing and pay 6 months of interest.
Yeah.
And then credit score 650 or better. I always I don't pull the credit, but I want proof that they've got 650, because I know that's the DSCR number that gives them a decent terms. So anyway, so then you start looking at the asset, where it is, and just kind of, I drive all the houses, try to make sure I understand the neighborhoods and stuff like that. So it's a really good mix between the asset and then the person themselves. So we can get deep in the weeds on this stuff, but I have people that help me put a whole underwriting sheet together that details who this, I want to make sure they're daisy chain wholesalers. I want the contract with the seller. I want them, let's get through the
right.
The muckety muck.
Right. That's right.
And like, what are we really paying for here? And make sure that, and I'm trying to protect the buyer as well, the client. I don't want them overpaying. And hey, if I can push back and be the bad guy to the wholesalers, like, hey, I'm not going to pay $50,000 in wholesale fees on this loan. I did one a couple weeks ago, and they knocked off $10,000, and that just helped my client.
Yeah,
right.
Sure it did.
But then it also protected me. Yeah. So the client understands that role that I play.
Yeah, if you're on their side, that's great.
Right. So,
well, how do you like? I know you understand Memphis like the back of your hand. I mean, there's probably no street. We have a friend here in Birmingham that we always mention, Brian, and Brian knows every street in Birmingham. He's driven them for 30 years and knows them all, bought houses on all of them. How do you expand into a new market like Birmingham where you don't really know the streets all that well?
Man, I'd tell you I told you I spent 3 hours last night driving this city. That's why I came here to and
to better understand.
To better understand. Yeah. And I will tell you this: I've done 3 just random. Somebody that's done stuff in Memphis said I'm going to do in Jacksonville, or I'm going to do in Boone, North Carolina. They've all failed for whatever. Like just because I don't know them, there was kind of a referral. Like, and I mean, like Jacksonville.
How did they fail?
Just they didn't know what they were doing.
Gotcha.
And so. And then I get stuck. So part of what the answer to your question, like in Jacksonville, I don't have a person to call to cut the grass.
Right. Are you stuck mid-project, or were they rehabbing these homes and now it's like gutted and you're like, well, we're going to give it back to you? Yeah.
They were finished, and then it had a little fire, and then he's like, my hands are tied. There's no more money.
Yeah.
So that kind of thing. So like then you're just kind of stuck with like, how do you get to the finish line?
Yeah.
But at Birmingham, I've been here 3 times the last 6 months, driven, just trying to understand the streets. I'm like, y'all got so many daggum 22nd West.
Oh 10th. Gosh, yeah.
I've never seen anything like it. I called my wife last night. She's like, sound like you're in New York.
10th Court Terrace West. Yeah. I mean, it's nuts.
I'm like, and then you just like north and south. Like it says 20 miles away. It's like, it was supposed to be right here. It's because I went south and not north. I mean, right. So anyway, I'm learning,
good.
But I'm also getting desktop appraisals on the front end, so that helps me. And I want full video pictures of every house. And then I'm just, I'm asking local people their opinions. So I'm trying to ramp up because when I came here, one of my clients asked me to come here, and I knew you guys were here. We talked about hard money business 3-4 years ago.
Yeah, that's right. I remember. Yeah,
I had a whole plan together and stuff. So Birmingham's always kind of been in my mind to come and do business here. So. so once I go do something, I'm going to go do it. If that makes sense. So,
Yeah.
but I don't recommend anybody like,
Don't recommend people going into new markets without
and
knowing
same
what
thing
they're
with,
getting
and
into.
same thing with buying a house. I would say if you're going to go buy, if you're in California, you're going to buy Birmingham, Memphis, wherever, man, go for half a day.
Yes,
What's a
100%.
$500 ticket and
It's
a
nothing.
$200 lodging?
It's better than losing $50,000.
Spend $1,000 to go spend 4 hours and like I can't tell you how many people we were talking about Memphis. Like, all right, here's the area that's 15,000. Here's the area that's 50. Here's the area that's 100. Here's the 200. Let the people see, because people in California sitting there and think about $50,000 house. Oh, that sounds great, but then when they go see it, well, I don't really like that kind of area. You know what I mean? Like I've had that happen so many times. So my encouragement would be like, whether it's a loan or buying a house, go and spend a day. You know, I can't tell you, I couldn't imagine these guys in California buying so many houses in Memphis and Birmingham and they never go. And I'm just like, I wouldn't go buy a house in California.
Yeah.
You know?
We had some investors reach out to us. So we started 10 years ago just recording content about Birmingham, like videos, like, hey, here's where you should invest in Birmingham. And Matthew and I put a big map on the wall, and we just had I don't even remember what kind of camera we had, but we were recording. We were just saying, stay out of this area, buy in this area, da 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 da. But we would always tell people, you need to come and see these properties, or drive the streets. You need to walk the streets because it changes, just like Memphis does, from street to street. And we've had more than one investor reach out to us who'd been just taken advantage of, and they had paid for rehabs that never got done.
Yeah,
and I'm just like, it just kind of blows my mind.
Well, and that's the piece I'm trying to figure out now. Birmingham is getting the right inspector to help me, you know. And some people I just trust because I've been doing business with them, and the pictures are phenomenal, but you know, the newbies, I just want to put somebody to put their eyes and ears on it
right,
because that's probably, and this is probably for your watchers, listeners, like people get in trouble when they ask for more money versus what they've actually finished. Mm-hmm. They're always trying to beat, and so one of the things that I've changed is like I'll do a draw weekly. I don't have this 30. I used to have a 30-30, 30-10 kind of rule. You know what I mean? Like, but now I'm just like, I'll do 10% a week. I don't care. But because if you show me a roof's done, I'll pay you for the roof. Mm-hmm. So, I mean, but don't tell me a roof's done and
want another draw
and the roof's not even done. Like that doesn't sit well with me. So
sure.
I'll put the brakes on that real quick. But you know, and again, that's there's a book, Stephen Covey, Speed of Trust. Like, do what you say you're going to do, execute. Communicate, follow up.
Well, that's the way you did your business, right? That's the way you did your business with the banks and with everything, never missing a payment, all. And so you're baking that into your business. Like you're looking at your clients, like, hey, I want you to do the same thing I did, which is the right way to do it.
And that's why I've kind of stayed on the front side of the lending. Every other business I'm in, I'm on the kind of in the background now. Like I don't operate any of them, but the lending I still do because I want to coach the people as best I can to like, don't do what I did on certain, you know what I mean? Like learn from, we used to have this phrase, like don't start in the basement. I started in the basement, you know, but if you go walk alongside of me, I can get you to the 5th floor pretty quickly because I've already made the mistakes between the basement and the 5th floor. You know what I mean? Like
if you're willing to listen. Yeah.
If you're willing to listen.
Yeah.
And that's another key ingredient, what you just said. Like if you have a borrower that just wants to tell you everything they know and how good they are and they're not listening.
Yeah.
Not that I'm not, from humility, I'm not saying but I've made all the mistakes.
Yeah, right.
I made a ton of mistakes.
Well, you've got 20 years of experience, or more
Wisdom.
than that. You got 15 years of experience.
Well, I think we've talked about this before. I think what makes a smart investor is all the crap you've been through. You know, like
that's right.
You're like, I'm not necessarily smarter than you. I just know, hey, there was this one time I got messed over on this house. So now I know every time I look for this, and then it adds up to where you're like, hey, I've got this whole criteria. But a lot of the stuff you just mentioned a minute ago about, having lenders that, or, you know, in your case, clients. Like I've got a lender now that I use that's a mutual friend of ours. And, you know, I'll call him now because I've done enough with him. And he's like, you know, he doesn't check the house. He's like, hey, I trust you. You know, I know you'll figure it out if something happens. And I'm like, well, I don't know if I like that totally.
Yeah,
but
good.
I appreciate the trust, but also it scares me a little bit. So anyway, because most of the time with a hard money lender, I tell people all the time, hey, if you're going to use hard money, you know, if you're going to use something, I guess a loan, let's put it that way, you're going to know if it's a good deal or not, because if the hard money lender won't lend to you on it, you pretty much know it's probably not a deal, you know?
That's right.
So I know around here, you mentioned, I think, 5 points. I usually borrow at 12% and 2 points. There are some of these like nationwide lenders that I know people use that a little bit more of a lengthy process, but they're doing like 10.5%, 1.5 points, and all, but I just always like somebody local that I've dealt with before. I'd rather pay a little bit more because, like you said, somebody you deal with all the time, they're calling and say, hey, can I get a draw? And you're like, yeah, sure, we'll go ahead and do that. You don't have to come out there and inspect it necessarily. But all that to say, if you touch on 12% and you said 5 points, is that kind of standard? Do you ever work? Is that flexible? How does that,
Yeah, that's a great question. And if you don't mind, I was going to tell you, to me, there's 3 types of hard money lenders.
Yeah.
Like in Dyersburg and Jackson, we can't really do business. We can't really lend there because there's so many farmers. And I don't want to generalize, but like farmers just have cash, and they'll loan out 8% because they're so used to such lower returns. They're just willing to give.
So this is private money people are using?
Private money.
Okay.
But the problem with that is it runs out.
Yeah.
They're limited. So I can't tell you how many calls I've gotten that they're at the closing table or 2 days out, and they're like, hey, my lender he just ran out of cash. Can you do this loan? And so that's one of my core principles. That's why I was meeting with the bank yesterday. I was like, I can see Birmingham's growing. I need to get ahead of it. And so I was meeting with the bank. I said, look, I don't need your money right now. I just need it probably 6 months from now. Let's go ahead and start this relationship and let me put some money with you. And, again, but that's one lender is the farmer. Again, it's just a professional, doctor, farmer, somebody that's got cash in a limited amount. Then you got somebody like us, this kind of, LLC established. We got a mortgage software, we got a staff, but we're going to be expensive, but we're going to do 100% financing. It's more of a relationship. Like your guy, like he trusts you, right?
Yeah.
And he just believes and, knows that you're going to do the right thing. That's more where we land. And then you got the Kiavi, the national guys. And I can't tell you how many times, the couple things that happen with them, their inspections, if it's not 100%, they won't give you any of the draw.
Yep.
Like, oh, well, your faucet wasn't on, and that was part of this $2,000 draw, so we're not going to give you $2,000 and we can't get back there until next Tuesday, and it's Thursday. You know what I mean? Like that kind of stuff.
Hassle,
and they keep changing the terms, like what they're willing to do, 90%, 80%, 100%. Like I don't know how their money works at the Wall Street level, but it just ebbs and flows. Does that make sense?
It's a
moving
complicated
target
process from what I've heard. A lot of people, but the reason I'm asking this, my long-term goal, I want to be a hard money lender eventually one day. Like you go through, you've talked about, for years you were working 2 jobs for 13 years at the Piggly Wiggly or whatever, collecting rent, with your daughter there. And I've done, a ton of, we could probably share stories all day about this stuff. You obviously have more stories, but, getting to that point now, you can kind of sit back and be like, all right, I've done all the right things now. So I'm in this position where I don't have to necessarily take all the risks that, let's say I'm taking, going out there, trying to market for the deal, find the deal, trying to, negotiate all this. That's kind of a good spot to be in. So I'm kind of fangirling a little bit right now because I want to be in that position, So that's why I'm kind of interested in this podcast as a whole, but, kind of your business too.
Well, I mean, I think that's could be a goal of anybody that invests in real estate. There's no reason why it can't be like that. Like I tell this story all the time.
It's definitely easier than property management. I can promise you that.
You guys look great to be in property management for as long as you have.
Man, I don't have much hair left because of property management. Right. Like it's a long road, man. It's one of the hardest jobs. It's
brutal.
Out there. It's brutal.
Brutal.
I feel like you can't win.
You don't win. It's just
the
a
tenant
grind.
or the owner.
It's a grind.
Nobody's happy.
Nobody's happy. You're dealing with problems all day. You're a firefighter. It's
I feel bad for our staff.
And it never stops.
It never
It doesn't stop.
You wake up. Yeah. I mean, and same thing with owning property. Like, it's a passive investment, but it's active passive.
That's right.
It's never it's something you're managing. So you might have a property management stuff. But anyway, my point was where and I'll back up. I can remember being on a plane going to San Jose. I was going to California. I had 20 trips to California one year for manufacturing. So I had a lot of time on the plane, right? I wrote a plan to have 300 free and clear houses by the time I was 48. That's my only plan I had. And why did I do it? I was doing it for financial freedom and have choices. I didn't know that I was going to be able to create a hard money business and a property man. You know what I mean? Like I just wanted 300 houses free and clear. And my point on telling that to your group that listens to you is like, it creates choices and options.
That's right.
Like if you don't write down a plan, that's another thing I would probably, if you want to just walk away some nuggets, like write down a plan.
Yes.
We use Traction. I think y'all use Traction.
We do. Yeah.
but we use Traction. Like all the businesses I'm invested in use Traction. Like if you don't write down goals and have a 5-year, like where are you going?
You got a
like
10-year, a 5-year, a 3-year, and a 1 year.
Yep.
On
You
your
got to be working
on your
this
vision
month.
traction organizer.
Yeah,
That's
you got to be
right.
working this month for this 1 year that feeds into the 3-year, which feeds into
right.
the 5. And so I did that with the 300 houses, and it was funny because I was when I turned 48, I just Christmas is a lot of time of reflection. Like you got downtime. I'm like, oh, wait a second, I hit that goal. You know what I mean? I was just like, I didn't even think about it because I've done so much other goals ahead past that. But it was really cool just to reflect, being as a 27-year-old that that I made that goal by the time of 48 to hit that. I mean, and that's a long time, right? From 27 to, I probably wrote the goal when I was 28, 29, but.
Well, that's the first. We just recorded a podcast just the other day, or not a podcast. We recorded a video, a YouTube video, and the whole premise was, if I could start all over, this is what I would do. And so the very first thing was to write it down. Is to determine the goal and then really to determine the why behind it. Like, why do I want to own 300? And then ask why. If it's financial freedom, well, why do I want financial freedom?
Yeah.
Well, because of this. Well, why is that important? And so you kind of drill it down. That's going to motivate you. If you just write a goal down, a number, it doesn't mean anything, right?
Yeah,
and so here, even here at Evernest, we've got this 250,000 door goal by the end of the decade. And like, that's the vision, right?
Yeah.
If you don't have a vision for where you're going, you'll get nowhere. You won't even know it.
I love that because, I mean, think about it. I met you guys when the goal was 25,000.
That's right. Yeah.
And then when I was talking to Matthew a few months ago, it's like, well, we've moved that goal.
Once we got like 12 months out, we said, nah, not 25,000. Let's go for 250,000.
That's right. It's really cool. Like, but y'all got to the number.
Yeah. And we don't know how we're going to get to 250. Like there's no clear path.
Right.
But we know we just got to keep
the mantra,
plugging away.
that's
That's right. We just
right.
got to keep moving and keep
My
working.
wife tells me all the time. She was like, because I'll say, I'll come on frustrated one day, and I'm like, I'm not gonna be able to hit my goal this year. And she's like, well, are we gonna go broke? And I'm like, what are you talking about? I'm like, no, this, And she's like, I know. I just want you to know. Like, I just want you to regurgitate all this stuff.
I want you to have a different perspective.
But she was like, your goalpost is never gonna stop moving, is it? I was like, no. I was like, I'm probably never honestly gonna be happy with anything, because I was like, it always keeps moving forward, But
isn't it crazy how, like, your wife can be your best business, does nothing about your business.
Yeah.
I'm assuming. Mine doesn't.
Yeah.
But like your best business partner, because they ask you those tough questions or say those tough comments.
Yeah.
Like mine will be like, well, is it God's money? Yes. Can we live if something were happening? Yes.
Yeah.
Well, then what are you worried about?
Yeah.
I'm
Yeah.
like,
Well,
let's just break it down that simple.
Yeah.
Let's go have dinner and
yeah, right.
And then the next day you're back to it. You're like, all right, I got to figure out another
I'm in trouble.
and put this money back to work.
new problem.
So,
That's right.
But you did mention, I think, getting this first apartment, and then was it 300,000? You got a line of credit.
Yep.
Okay, so that you started basically hard money lending with $300,000, call it. So, I never would have thought that's more attainable. I think a lot of people think that when you're going to get into hard money, you have to have millions of dollars in the bank, right?
No.
And it's refreshing to me to know, okay, well, you could start with probably 150 to 300,000, depending on what price point you're lending on, just to kind of start that business.
Oh yeah, just just dabble.
Yeah.
I don't like to use the word dabble. That sounds like you're in and out. But like just experiment. I call it low cost experiment. Like even a $100,000 house paid off, get an $80,000 line.
Yeah.
I mean that 80,000 can make you another 10,000 a year.
Yep.
Right. And then if you could take that 10 and just kept it, then all of a sudden you got 90 the next year. I mean it'll snowball on you. So
I think it's like any business probably. I mean, you tell me. I think as long as you're very careful on those first, let's call it, 10 to 20 deals that you do, right now you're at a place where you just told us about 3 maybe that have gone south. And I know you've probably got horror stories more than that. You can afford to take those licks. Whereas like when you're first starting out, you probably got to be very, very careful who you're lending to, kind of the first deals, because that can either make or break you, I feel like.
Yeah, that's a great point.
Yeah.
I mean, your first few choose the right way, the right ones, the ones that you really know that will
Locally, the areas,
and
the
be willing maybe even
properties.
take less, maybe do 12 and 2 instead of 12 and 5.
Yeah.
There's something to be said. I got friends in Memphis that get loans at 10 and 1 or 10 and 2, but it's guys that just they're over here working. They have no underwriting process. Like I've got a business.
Yeah.
Mine's a business. You know what I mean? Like theirs is just trying to put money to work instead of the stock market. And so anyway, my point is like they're willing to accept less, but they're going with a horse that they trust that is just going to deliver.
Yeah.
That's done it for 20 years. And that's how, same thing with you. That's why you're getting the cheaper money.
Yeah.
Is you've built that trust.
And yours is going to be scalable, where some of these people are not necessarily scalable.
Yeah, I just wanted to be something scalable. That's exactly right. I wanted to be a business. At some point, I like to extract myself a little bit more because I love coaching and helping people.
Yeah.
I'm doing that, but I'm also in the weeds of the day-to-day with the underwriting and stuff like that.
Do you coach people that come to you for, like, they want to get some
unofficially
loans, borrow some money?
coach.
Unofficially, yeah.
So
it's not a business.
It's not a business.
Yeah.
I'm not a guru out there charging $10,000 to meet with me or whatever. I just feel like I was blessed by others ahead of me that poured into me without charging me, and I'm like, if there's one thing on this earth that I could do is to help others, that's what I want to do. I feel like that's what, and I've just got empty nest and things.
Got more time.
I got more time,
Yeah.
and so if I could do that and have the team take care of the clients, and I can help keep people out of trouble and teach them, that's what I'd like to do. Yeah.
That's exactly that's why we have this podcast. That's just what we think about here is, if we help enough people get what they want, we'll eventually get what we want. It'll come back around to us. We can give away. It's like give, and then down the road, if somebody needs a property manager, they'll reach out to us, or if they need a friendly agent, an investor friendly agent, or whatever, then fantastic. But if all they do is learn from us and learn to avoid mistakes that we've all made, I'm happy with that as well.
Have you ever read the book Giver versus the Giver? I think it's called. It's about being a giver versus taker.
Yeah.
And I just love what you said because, and this goes for you and I, challenging all of us, but your audience as well. Is like, if you put money as the byproduct of doing the right thing and being a giver, just practice selfless giving every day, that the money will come.
Yep.
It just will happen
that's
because you're
right.
doing
It
the
just
right
happens.
things
Correct.
and helping others to succeed. That's where the secret sauce is. People, if you focus on the money, because one of our core values we came up with years ago was long-term partnerships versus short-term transactions. I don't want to partner with any transactional people. I just want long-term partnerships, whether it be your bank, your property management company, whoever you're dealing with. You want it to be a long-term setup and a win-win. That's another piece that I would say is like, it's got to be a win-win. I think that's where people, a lot of people that come to us with property managers, it feels like it's a win-lose. They're just beating you down. It's like, man, I got to make some money. Like, I got to pay these bills to staff to help you. Like, I can't just give away the farm. So I try to shy away from those people. And I told the bank yesterday, I said, man, I will guarantee if you take me on as a client, I'm not going to be shopping your rate. Meaning, like, if you give me 6.75% and a half point fee, whatever, kind of in a range of normal, I'm not going to go and say, all right, bank.
Right. You're not going to.
Well, they said they'll be 6.6.5.
Because you're looking for a long-term partner.
I want them to be there for me.
Yeah, that's right.
Like, is it worth a quarter of a point to lose that trust? And like, there's Dan again. He's just going to come shop us every time. Like, and same thing with hard money. Like, if I get these clients that like, well, Kiavi's doing this now, we'll go to Kiavi.
Yeah.
That's what I tell them. I'm like,
yeah, right,
I'm
sure.
like, I'm not here for Kiavi. I'm here for what I'm trying to provide as a service and a benefit for you, and have a mutually beneficial relationship. I'm not looking for, and I like, so there'll be somebody else that'll come that appreciates that.
Yeah.
So don't chase that kind of stuff is my point. Like, anyway.
Yeah, I like how y'all just threw out all the Zig Ziglar and Stephen Covey quotes, the win-win, and
right.
if you help enough people get what they want, you'll get what you
That's
want.
right,
I like all the old school motivational guys.
But it's true. It's a great way to do business. It's a great way to build relationships, and you can operate within. And when you have integrity, there's longevity to your business. That's the thing. Like we've talked about here, we've seen so many people, and you have too, I'm sure, in Memphis, come and go because they've lacked integrity in what they've done. People who are greedy for money and will, rip people off, and they just don't last long.
We get more clients at Renshaw Property Management for property management because of people that don't do right. It's even to this day, it was worse years ago.
Back in the day, yeah.
Back in the day. I don't know what, I think just things got more institutionalized, but and it's harder to they're going to check you if you're a broker. Like we were getting business 15 years ago. This guy was managing 50 houses that wasn't even a broker.
Yes, right.
There's a ton of that.
Yes.
You don't see as much as you used to, but there's still every day somebody's trying to take advantage of somebody. And I was just telling a lady at coffee this morning that does business in Birmingham. When I first got into this, I was like, if I just have integrity, answer my phone, and do what I say I'm going to do, I'll be better than 90-something% of people in the real estate industry.
That's right. Yep.
And so if I'm better than that means I'm going to succeed, right?
Yeah.
And so I just take those 3 things. I mean, there's more to it, but like those 3 things.
That's the baseline.
That's the baseline.
That's the baseline.
That's the base.
That's where you start.
That's right. I mean, I can't tell you how many people you talk to. I can't get them on the phone, or they told me they're going to follow up, and I haven't heard them in 2 weeks. Like, it's like the bar is so low to be successful in real estate. It's the craziest thing.
Call and tell me, hey, I have no new updates. That's it. I'm just not going to call you.
Right.
Okay, I don't like you, but I'm still going to call you and say, look, there's no update, so you don't call me. Like, just whatever you want to tell me, just call me and let me know something.
Communicate.
Yeah, that's right.
Communicate. Anything. Yeah.
Communicate. I mean, that's huge. I mean, that's property management. I would tell you, like, if
It's
there's one thing
we
that
think it's execution and communication.
Yep.
That's it. Those are the 2 things.
That's exactly right. I mean, I can't tell you how many that we focus on communication.
No.
You know, like it's the client services piece of property management. Like, anyway, same thing with the lending. We want to answer within 2 hours. You know, it don't have to have the answer, but at least I've acknowledged that I've responded.
You're working
to
on
you.
it or something.
That's right.
Yeah, that's right.
So how many loans have you all done? I mean, how long have you been doing this, and how many loans do you think you've done?
My previous loan business I sold 3+ years ago. So I've been 98 Capital, say 3 years.
Okay.
We've done over 1,000 loans.
Okay.
Yeah. So good.
Yeah.
Good.
And growing. Right.
Yep.
Moving into, so you're in Memphis, you're in
Birmingham.
Jackson, Birmingham.
Yep. Montgomery a little bit.
Montgomery a little
Yep.
bit. Okay.
I'm
Be
going
careful,
to Mobile
Be
tomorrow.
careful in Montgomery.
Montgomery's a weird market. I've tried a couple things there. It's kind of it's strange.
Do some loans in Asheville, North Carolina. Where I
Okay,
spent
yeah.
some time. So
Love Asheville.
love Asheville. That's a whole different ball game.
Sure
though.
it is. This is a whole different ball game.
That's a whole different type of house.
Yep.
So, but it's fun. It's a nice area. But
Well, that's great. Anything else you want to touch on while we have Dan?
I don't think so.
Dan, this has been fantastic.
Yeah,
If
man.
people want to get in touch with you, let's say they're considering Memphis or any of these markets, Birmingham that you're in, how do they get in touch with you?
I mean, my email is danbutler901@gmail.com, and my cell is 901-289-7888. My wife's gonna kill me for doing that. But
Yeah, that's
What's your wife's cell phone?
yeah,
home address. No.
it's not far off from mine, but like, yeah.
But
So
I
just have one number. If somebody wants to talk, I'm happy to talk. So
Yeah.
and I know that you've got because you sent me a bunch of videos. You're like, hey, here's
how I do the loan.
Yeah, how you do the
Yep.
loan. Like you reach out to Dan, he'll send you all that information. You can
Yep.
look at exactly the way
the process.
Yeah, the process of
Yep.
how you start it, how it goes, and
That's been fun to do because I did that for property management first because I was the
Yeah.
liaison, and I'm an introvert naturally. And I kept answering the same questions 3 times a day, every day for years, and I was like,
how can I not do this?
how can I not do this? So I just created videos, and I said, here's how we do Section 8, here's how we do leasing, here's how we do collections. So I just implemented that same thing for lending, and this is how we look at underwriting. This is how we do draws, and this is how we charge and why we charge. And
It gets 90% of the questions out of the way.
my phone
right?
calls for both for property management and for lending, I bet I went from 45-minute calls to about 10. I told a guy 2 days ago, new lending client, and I said, what questions do you have? Oh man, I just want to hear your voice. Your videos are great and answered all my questions. I just want to make sure I connected and say hello and want you to hear what I'm trying to do. And I'm like, great, that's awesome. So anyway,
That's exactly. I'm
That's
an
exactly-
introvert. I like 5-minute calls, not
that's right.
45-minute calls.
That's exactly right. I want
Real
to be
quick,
in and
I'll
out.
tell you, I'm the same way. I'm an introvert by nature. When I get home at night, my brain is fried if I talk to people all day, and I just got to veg out. But I do the same thing with, like, I've had private lenders reach out to me and say, I saw where you had, talking about paying your private lenders on Facebook, blah, blah, blah. And I just put together these videos showing exactly, hey, this is, you'll have equitable interest. This is a mortgage and a note. Give them all examples and actual numbers where I can, like, look, if you want to do it, watch these videos. If you're still in, 90% of the time, 99% of the time, they'll say, yeah, I'm in, let's do it. So you don't have to sit there and talk and explain and all this kind of stuff. So
Yeah.
that's a great idea that,
Yeah, I
I
mean,
like doing it too.
Yeah, if parting shot on that, just have processes.
Yeah.
For whatever you're doing. If you're buying rentals, we talked about writing it down, but then just putting processes in place, and that's a key piece that for success.
Yeah.
Being
It's-
repeatable.
That's the execution part
That's
of it.
the
It's the
execution.
communication and execution.
Yeah,
You
that's
got to have
right.
processes that you follow. Yeah. Well, Dan, this has been great, man.
I know,
Thank you
man.
for stopping by the studio.
Absolutely.
I know for your introverted self, it took a lot out of you. You've
gonna
been on,
take a
you're
nap.
on a
I'm
road
gonna take
trip.
a nap.
Yeah.
You're gonna take a nap, but then you got to go meet with
Wish
a
I had a
bank.
Tesla today. I wish I'd rented a Tesla and I'd
Yeah.
let it drive myself.
Yeah, that's right. You could have
Yeah.
just like slept.
Slept yeah,
That's
but
right.
We'll be all right.
Well, good. Well, thanks for being here, and we'll put all your information in the show
Okay.
notes. And that is it for this episode. We'll see everybody next week for another episode of the Evernest Real Estate Investor.